Let's distinguish the family under the umbrella of the term crypto. So you mentioned Bitcoin.
Yeah.
We publicly, repeatedly said that we are not too fond of the idea. It ticks all the boxes of a bubble.
Yes.
It lacks the traits of a financial asset. Normally, if you invest in something that's supposed to be a financial asset, you get a yield out of it.
Yeah.
If you own real estate, an apartment, you get the rent from the tenant. If you buy a bond, you get the interest rate payment. If you hold stock, you get a dividend. So there's some kind of cash flow. Bitcoin doesn't do that.
Yeah.
So it doesn't have the traits of the financial assets. Why does the price grow?
And the same is true of all cryptocurrencies?
I'll come to that in a second.
Stable, yeah. Sure.
3 seconds. So where does the money come from? You need to hope, believe that someone else will give you a higher price in the future. Economists call this the greater fool theory.
Yeah.
You believe that, and this might be actually rational, you believe that you will find someone who's a greater fool to give you more money in the future. And this, in theory, even in theory, cannot go on forever. Now, that's one of the reasons why we were in the past and still are quite dismissive of Bitcoin as an asset. In particular, as it lacks also the economic use case that other things have. Like you have raw material which don't yield any cash flow, but they are used in the real economy.
Yeah.
Bitcoin supposedly is a payment system, but it's hardly used for legal payments. So by and large, 80 to 90% are used for financial speculation or investment if you want to be more neutral. So that's one group. It's unbacked crypto assets without intrinsic value. There's a second family, the stable coins, which function differently. So there you have the idea that based on a similar technology, blockchain-based, you can have an asset that is packed to a real asset, be it
Normally the dollar, or it could be the euro, right?
It could be, so it can be an asset like gold in theory. It's mainly pegged to the dollar. It can be pegged to the euro. 99% of all current stablecoins are pegged to the dollar.
Yeah.
In theory, it works like you give me your money, you give me your pounds probably, and you get back a jeton as if you want into a casino.
Yeah.
Because in the blockchain environment, you play with something that is working on a blockchain. You don't pay with fiat money. I take your money, you have the token, you have the stable coin, and I invest it on the asset side of my balance sheet into ideally stable and liquid, really solid assets. For example, US treasuries and the like.
Yeah.
So that's the theory. But in an unregulated environment where no one checks where the money goes, where it is invested, there are inherent risks.
Yeah.
So, and the incentive for the stablecoin issuer is, of course, to invest in assets that yield higher and they are more risky. And then it's pretty hard sometimes to honor the promise to convert the tokens back into real currency. So potentially there's much more solidity, but you need the proper regulation, which we have already in the EU with the MiCA regulation, and which is underway in the US with the Genius Act.
Yes. Do you hold any cryptocurrencies?
Myself? No.
No. Let me just ask a question to the audience, because I have a feeling, I'm not sure we get any honest answers, but if I were to ask this question in America, there might be a very different answer. If anybody here holds a cryptocurrency, whether it be Ethereum, Bitcoin, whatever, could they put their hand up? One person there. Very good. 2.
Hello.
3. 4 here.
Yeah.
So there are some brave people who will challenge the greater fool theory. I mean, I was at a meeting in Texas the other day, and there were just 12 of us. and they were pretty savvy financial people. I was amazed that 8 of them have assets in cryptocurrencies. But there we are. Gregory, the floor is yours. I mean, you're against money laundering, but
yes,
you're indulging in this crypto. Is it Bitcoin that you have, or
it's Bitcoin and a few others, but it's very, very little. You know,
do you know the price of Bitcoin now? Have you checked?
I don't check it daily. I've seen it go up. I've seen.
Would
it
you
go
like to know what it is?
Please.
Well, a
if
few
you know the
minutes,
exact price
not
of
so
it.
long ago, about an hour or so ago, it was 92,674 euros. So, depending on
$100,000, yeah.
you, with luck, you're okay.
Yeah, but I do agree with what Jürgen says. We need to be careful, but at the same time, you know, just like evolution cannot be stopped, innovation cannot be stopped. And I think the hype with cryptos is that, you know, it's like a new game, a new toy. You know, you want to play with it a bit. You want to try it out. And the price can go up, the price can go down. You can get lucky. You can also get unlucky.
But surely the innovation is actually blockchain technology.
Yeah, which is
Which
something we can use
Yeah.
in many different things.
Exactly.
And that's a difference between, I guess, cryptocurrencies and perhaps NFTs or meme coins, where there is no fundamentals behind it. There's nothing there to support the value, whereas blockchain can be used in many different ways. I'm not a technologist myself, so I don't know how exactly you can use it. But what I would say is that, you know, with innovation, you need to be there. You need to understand it. You need to control it, perhaps with regulation, or be able to understand the risks and somehow manage those risks.
I mean, you mentioned meme coins there. And I mean, for example, I don't know how you pronounce this, Dollar Trump or Dollar Melania. I mean, this is ridiculous, isn't it? There is no conceivable market for that except the hope that you can con somebody else into taking a meme coin and then, etc. I mean, it's ridiculous.
Speculation, you know, people.
Yeah.
You know, it's a hype. They buy something, they believe it will go up. I mean, a couple of years ago, I had some friends who were investing heavily, both in meme coins, but also crypto, saying that we know that at the end of 2025, it will be, I don't know, Bitcoin will be $200,000. Who knows? You know, nobody knows whether, you know, where the price will go. Just like, I remember also many years ago, when there was this stock craze, at least back in Cyprus, and people were investing heavily in stocks. But at that point, there were some fundamentals behind the stocks. With meme coins, there's nothing there to support it.
No, it's kind of crazy.
And they can be used in, you know, in fraud, money laundering.
Sure. Now, Jürgen, you represent extremely honest, well-regulated organization, the ECB. When you look across the Atlantic and you see that Donald Trump has just declared that, having been against cryptocurrencies, he's now very much in favor of them. And then when you look at Elon Musk with the Dogecoin, I mean, we're into an entirely different world, aren't we? And how does that affect the financial structure in Europe?
So the volatility of some of the political plans on the other side of the Atlantic, we are slowly getting used to that.
You could be a diplomat. That was so beautifully said.
I could not. I could not, believe me. We are getting used to that.
Yeah.
Speaking about the crypto approach, what we know is that the crypto industry has been a huge supporter of the campaign of the Trump election, but by the way, they also have spent a lot of money for the Democrats. So
Yes.
they invested big time into the
Both sides.
on both sides.
Yeah.
So and now, one major difference in the US compared to Europe is that the spirit of the administration is much more crypto positive. So we have the Genius Act now, which is supposed to go through Congress. It can take some time. But the spirit of the Genius Act is actually quite similar to what we have in Europe. A difference is first that the overall political message is very pro-crypto, and that the European side is seeing the innovative potential of stablecoins, for example, but also take account of the risks and have a strong alliance with consumer protection. And a rather new element there is that the US administration makes clear that there's also a fiscal element. Like the US Treasurer recently said this week, I think, that they aim to use the stablecoin legislation to support the further dollarization of financial markets. They see a potential of stablecoin market capitalization of $2 trillion, which is in the order of magnitude of 10 times what we see now. And as 99% of all stablecoins are denominated in US dollar, that means these new stablecoins need to be backed mainly by US denominated assets, mainly US debt. That economically would take away some pressure on interest rates when the budget increases. So this is a fiscal element that
it
supports.
extends the exorbitant privilege of the dollar being this.
It's a new vehicle,
reserve
yes.
currency.
The spirit is the same.
Yeah.
It's a new engine for a vehicle.
Yeah. Because at the moment, I guess you can't actually pay your tax bill anywhere except perhaps in El Salvador with Bitcoin. You have to actually convert it into a fiat currency.
You have to pay your tax. That's one of the basic elements of the definition of legal tender.
Yeah.
In your legal tender, which is in euro, in Europe, the euro and the US dollar. El Salvador has two legal tender, which is a funny combination, US dollar and Bitcoin. So you could do both.
Yeah, yeah. In terms of anti-money laundering, I mean, Bitcoin in particular, but a lot of cryptocurrencies have an extraordinarily bad reputation. People, criminals on the dark web, et cetera, and then you have the enormous fraud of FTX with Sam Bankman-Fried, and yet still the surge towards cryptocurrencies continues. Why? Is this a frailty of human nature?
I want to hope that this will change with regulation. Blockchain promises trust. The transactions are there, they're stuck on the blockchain, nobody can change them, and you can actually have tools which will help you find the information. It used to be anonymity. Now with the tools and the regulation, it becomes more difficult to use cryptocurrencies for money laundering. But again, blockchain promises trust, and trust comes through the code, but we still have the human factor. And because of the human factor and the human behavior, there still needs to be oversight. And to my mind, and I think this is the way regulation is going as well, we are treating cryptocurrencies just like any other currency and crypto providers like any other financial institution. They need to have a program in place, an anti-money laundering program in place to know who their clients are, with the travel rule that has recently extended to cryptos as well. You know who is selling the cryptos, who is buying the cryptos, who is sending the cryptocurrencies from one place to another, so that you can properly screen against sanction lists, for example, or blacklists, and that makes it more difficult for cryptos to be abused. Obviously, it will take time, but I think we're in the right direction.
Jürgen, what is the regulatory approach towards cryptocurrency in the EU?
So we have MiCA, markets in crypto assets regulation, which is in place effectively since December last year. It mainly addresses stable coins. Make sure that they are solid. It's relatively clear on the asset side, on the reserves. It makes clear that the intermediary is registered and supervised. So it tries to put the logic of of our established regulation to the crypto sphere. It's quite silent on Bitcoin, though. So the overall stance is too silent and maybe too lax on the Bitcoin, the non-backed crypto, but it's quite clear on stable coins. And for many, including the industry, this clarity gives also security in terms of planning to the industry, and it also takes away the dodgy smell of some of them because it's regulated.
Yeah.
So it tries to strike a balance between protecting consumers, protecting financial stability, and at the same time leaving scope for innovation and increase in efficiency.
But it doesn't deal with meme coins or with NFTs and so on.
Not to my knowledge.
Yeah. Should it? I mean, Gregory, what do you think?
I think it should. But, meme coins, to my mind, are like the casinos of crypto. It's like the casino of crypto. So just like casinos have a structure and licensing and principles and policies and procedures, the same way, with meme coin trading, there should be some regulation in that direction.
Is there any sense in which cryptocurrencies are sort of a distraction from the proposals or need to have a digital currency? I mean, it's notable that China, for example, bans cryptocurrencies and yet still wants to have a digital yuan or digital renminbi.
They're two different things. So we have now three animals under this umbrella. So you have the unbacked crypto like Bitcoin. There is a case for ban, but probably if you regulate it like gambling would be sufficient. If you increase financial education would be sufficient. Then you have the stable coins, which work as a bridge between traditional financial instruments and traditional currencies and the blockchain world, if you will.
Yeah.
And then you have the true central bank money, the underlying raw material for our established financial system, the banking industry that likes to settle in central bank money. So there's a gap, and the true difference is that stable coins are effectively private monies. So they back somehow. They are backed by real assets, but they are private monies. And the CBDC, the retail CBDC, is a liability of the central bank, which is backed by the entire balance sheet of a central bank, which is backed by the law and order of the jurisdiction in which it works, which is backed by the economic power of that jurisdiction, and like cash, but in a different aggregate level, it's the most liquid and secure asset without any credit risk. So economically, there's a huge difference between them.
Yeah, no, I take the point. You mentioned cash, of course. And I mean, if you go to anywhere in Italy, for example, or I think probably in Greece, the encouragement of the governments is that you should pay with a credit card to basically avoid tax avoidance by the people who prefer that you pay in cash. I mean, this is, in a sense, the same problem you have with crypto, including stablecoins. I mean, how do you how do you finesse that particular problem in which you've got people trying to avoid the jurisdiction and the disciplines of governments? Well, either one. I mean, Gregory.
Again, the world is changing, right? We're talking about the digital euro, but at the same time, very few of us are actually using cash nowadays.
Yeah.
We're using cards. I took a taxi from the hotel.
That may be because of COVID, though, actually, if you think about it.
I think it's COVID. I think it's also easier.
I mean, it's so easy on my phone to use Apple Pay.
Exactly, it's much easier to do that. So again, I think it's unavoidable. We're moving in that direction. And I remember going to the Nordics a few years ago, and I had cash on me, and I did not use any of it for 2 weeks. People were used to paying digitally, right? Maybe you don't call it the digital euro, but it is digital money. You do use your phone to pay. And I think we're moving in that direction. And yeah, it is also for, obviously, to avoid tax evasion. It helps in that direction as well. There are tools to work in that direction. But yeah, this is where we're going. There's no turning back to cash.
Well, let me ask Jürgen for the final word. You mentioned at the beginning that this is the greater fool theory, this bubble, blah, blah, blah. If you have a bubble, then obviously at a certain point it bursts. When is that going to happen?
Well, the interesting thing about the bubble is you only can come up with a final verdict once it bursts.
Yeah.
So, and you made that point earlier. It can be actually very rational to know that it is a bubble. You invest, but you think you know roughly the time when it will burst, and you get out before.
Yeah.
So it's not a contradiction that very smart people invest into something like Bitcoin, even thinking it's a bubble,
Yeah.
but they will manage the right timing. Having said that, in so far, Bitcoin is quite different from previous bubbles because it has bursted already 3 or 4 times with an order of magnitude of 80%, but it came back each time. Now,
Is that because criminals needed it?
actually, the usage of Bitcoin for money laundering and terrorist financing is going down compared to stable coins because even for the crooks,
Yeah.
Bitcoin is too volatile.
Interesting.
Huh?
Yeah.
But the thing is, the underlying mechanism are reviving this sort of bubble, and it's coming back because there's a lot of manipulation and the like. But the timing will depend, first, if there's the manipulation, when the manipulation stops, and second, if there are new layers of demand with a fixed supply, then the demand goes up. If one country says, I'm gonna introduce a strategic Bitcoin reserve, and the country is big, this clearly signals something. Even jurisdiction in the size of the United States say, we're gonna sanction and allow ETF on that very asset. Of course, it's a signal.
People will pour in.
It will pour in. So the element where this is triggered is the demand side. If there are new positive narratives, there might be new inflows. The end will be there, but when it comes, nobody knows.
Well, you mentioned that smart people, even when they know it's a bubble, but they'll still listen. We have a smart person here. Greg, you have the final word. When is the bubble going to burst? When will you get out of your Bitcoin?
It's too late for that. It's already way down. But, but I don't think, I mean, it may burst again and again and again, but I think cryptos are here to stay.
Yeah.
And I think all we can do is embrace that. We shouldn't be in denial. Embrace that. Embrace the risks. Understand the risks. You know, put in the right regulation, or at least adjust existing regulation to cover the risks there. And you know.
Well, I won't challenge the 4 or 5 people in the audience who have Bitcoins when they're going to get out of it. But one never knows. But 10 seconds. Is there going to be a change of official attitude towards cryptocurrencies in the EU? I mean, you mentioned that America is changing and there could be a strategic reserve, blah, blah, blah. Could that happen in the EU?
It depends on the crypto assets. So, as I said, you really have to, it's really important to distinguish between those that are unbacked, really risky.
So a stable coin could alter the whole.
There is scope for European denominated stable coins already, and there might be a political change in the attitude.
Gentlemen, thank you very much. That's been fascinating. Good luck with 96,000. I don't know how many Bitcoins you've got. I mean, there's still potential.
Very, very little.
Jürgen, I think you're being very, very sensible myself. But